The last scale-up session for the day, we are going to talk about capital and cash flow, pretty essential to running a successful business. Stick around after this because Penn Street is coming in to do a keynote on the benefits of hiring people with different abilities, and it's going to be a pretty remarkable keynote. I've heard her speak a couple of times, and she is amazing. So I do encourage you to stick around. But this is all about cash flow and capital. That's one of the trickiest parts of running a business. Certainly you need to have your disciplines necessary for scale and the predictability of tracking all those KPIs so that you can manage your cash flow. But did you know that over 60% of business failures are actually profitable when they fail? Kind of a scary thought, isn't it? They ran out of cash. So cash flow management is crucial. And it doesn't really matter whether you're a nonprofit or trying to be the next Microsoft. You still have to be financially viable to achieve your vision. So I am joined today by three amazing people from the financial side of the house. So we've got Mike Blazes, who has a very long background in manufacturing. And I say that because I want to talk about some of the diversity of types of businesses that we've got on this panel that's very deliberate to try to give you as much perspective as we can on the different types of models for cash flow management. So Mike was the former CEO of Traceable Products, which is a manufacturer of measuring and monitoring instruments. And he is currently the president and CFO at BillGO. He oversees strategic investments, finance, legal, and HR at BillGO. Matt Bryson is over here, and he is at Madwire now. He has an extensive background in finance, both with law and private equity. He is a board member and an investor in quite a few firms and has evaluated financial viability of a lot of investments in the private equity space. He currently oversees finance, corporate development, and investor relations for Madwire, and came in as an investor with Madwire, right?
Correct. Yep.
Okay.
I was previously worked for 6 years at the private equity firm that invested in Madwire, then came over in February full-time as CFO.
Okay. And then Zubaida Bai. And Zubaida is a social entrepreneur. And so she is a for-profit business, but in many ways she's going to look like a nonprofit in the way that she operates her business. She has raised money up front to support the development of products. So she's raised over $10 million. And her business is focusing on women and girls' reproductive health in the third world. She's amazing. Like, it blows my mind what she's accomplished. So she focuses on helping women in the third world deliver babies safely. I don't know if you're aware, I wasn't, of how high the death rate is postpartum for both the infant and the mother because of infection. And do you mind if I tell the story?
Oh, please go ahead.
So she was in India and was in a village and met with a midwife, and the midwife was proudly telling her about her work in delivering babies. And Zubaida said, "So what do you use to cut the umbilical cord?" And she showed her a sickle, right? So her mission is to change that. And so far she has delivered over 400,000 safe birthing kits to women and girls in India and other third world countries. So, isn't that cool? She is commercializing other products now and scaling that business. And then she's also leading an investment fund to invest in women-led businesses in the developing world that are working to change and have social impact. And she's been recognized by the UN, the World Economic Forum, and others. She's got a TED Talk. She speaks to the UN, so she's a heavy hitter. We're very lucky. She actually lives in Fort Collins. So, no pressure, guys.
Yeah, geez.
We have this
I'll just sit back
panel,
and
right? Okay. We have just an amazing panel. So definitely held back some of our heavy hitters for this. No offense to our earlier guys. But we've been very fortunate the whole day to have some amazing panelists, and I'm so fortunate and so blessed that everybody came. But today, we're going to talk about what does it take to stay in business. We represent a few different companies up here because I'll speak a little bit from the software side also. But we've got software, manufacturing, distribution, and services businesses up here. We're going to try to keep the lessons relevant for everybody. But your industry may be out of the scope of our experience, and so we'll tell you if you ask a question that's outside of the scope. We'll be honest about that. Hopefully, the principles we're going to talk about are going to be universal. So the first thing I want to talk about is how to let mission drive strategy instead of money, because I think that's still important. And I think, were you the one that brought that up when we were doing our prep call? I don't remember. It was one of you guys that
I mean, we did have a discussion
brought
about
that
it.
up.
It's important.
Yeah. Why don't you talk about that, and then we'll just kind of go down the row.
Well, there's been a lot of discussion today about mission and what anyone sitting in this room is trying to accomplish in their business. And a business without a purpose can't be successful. That's absolutely important. A business without money can't accomplish its mission. And I mean, I've seen it happen in my life. I've seen it happen with people that I know personally. And being solely focused only on what you're trying to accomplish, just from a pure mission or vision perspective, can sometimes give you blinders to other opportunities that you may not be capitalizing on. And I know this is a cash flow talk, and it eventually circles back to cash flow and how it's important. But I think it's a good basis that we all need to make sure that we understand. What we're trying to accomplish, absolutely critical. Everyone who starts a business, everyone who takes over a business, everybody who's operating a business is doing it in almost all cases for the right reasons. They're passionate about it. They believe in it. They are good at it. They know about it. Accepting the responsibility for leading the charge on that is something that's a big responsibility. It's a responsibility to yourself, to your family, but also to anyone else that you bring in to your organization. So making sure that I focus myself and I focus the rest of the organization on driving to profitability as quickly as possible. Not going counter to the mission, but sometimes going parallel to the mission is really important in doing that. I'll talk all day, so just cut me off at some point. But you know, a relevant example that occurred since I came in to join BillGO a couple of years ago. There's a fantastic organization that was doing something similar to what we were doing, trying to change bill pay for consumers, for people. It's a pretty broken process, and I won't talk much about that because we'd use up the entire hour. But it's a pretty broken process, and there was a very passionate group of people who had started an organization in the Seattle area, and their mission was to make it easy for people to pay their bills in one place. Sounds pretty similar to what we were trying to accomplish. Very passionate about the mission, had gotten some funding, we're working with some people outside to get that accomplished, but didn't focus on generating revenues, didn't focus on generating cash, and overnight the floor fell out of that business because people weren't willing to continue to support the funding of that. And we were fortunate when this happened because we were able to identify this business, identify this team, and bring them in with us. And what they had built from a technology perspective and what we had built from a technology perspective, but also had brought access to certain markets, was able to be brought together and leveraged to generate cash so that it was a sustainable business. As a result, we brought the entire organization in. Nobody got let go. Everyone kept their jobs. And it's actually become a better place to work, I think, for everyone in that business.
That's a cool story. Okay.
Like the gentleman in the previous panel mentioned, I think customer is God, and it doesn't matter who you intended to sell to, but I think having paying customers is very important to your mission, to your business, to your cash flow, and to your survival. In our case, when we started the business, the product was developed with an Indian consumer in mind. The product was developed from an Indian ecosystem perspective. And when we started selling the product, of course, it was bootstrapped. We kind of made a few assumptions that did not allow us to penetrate the Indian market in the first year. However, we started getting a lot of requests from African governments and nonprofits, and we immediately jumped on board and said, well, we'll export. Now, being a company within 6 months of its existence trying to export product out of the country without selling inside the country seemed like this woman's crazy. She's out of her head, right? But we really had paying customers, and we wanted to get that opportunity. Of course, 2 years down the line, we had a university come and write a case study on how cash is king and how social enterprises should follow where the money is to survive, to prove that they will achieve their mission and their vision, right? So I think from that perspective, it's important to pivot. And like Mike rightly said, it's okay to go parallel as long as you're not deviating from your mission. As long as you know that you're going to keep your company alive and you have paying customers, it doesn't matter where they come from, and you should go ahead and do that.
Yeah, you can't accomplish the mission if you go out of business.
That's right.
Yeah, great. I'll speak about it a little bit from an investor perspective and then sort of tie it into my current experience. So when I was an investor, something that we always looked for when we met leadership teams was that sort of sense of mission, right? Because a lot of times we were meeting with companies when they were just starting out or relatively small from a revenue perspective. And something that we always tried to assess was how well will this leadership team be able to impart this mission to their employees and get their employees to buy in to that mission in order to keep the company driving forward. And for me, it's been really interesting transitioning to more of the operating side. I was with a gentleman who made a similar transition as I did a few weeks ago, and we both reflected on this phenomenon that we had both noticed, which was, and the gentleman in the previous speech was talking about just in the private equity world how you have these financial models which spit out what you think is the answer, and if you do X, Y, and Z, you'll get here, and that's all great. And sort of one of the things that I've realized in coming over to the operating side is that the problem with that is that the proverbial Jim in sales doesn't want to do what the model says, right? The hard part is getting Jim to actually execute on that and getting him to buy into the mission and having him believe that you have the best interest of the company and the mission in mind and getting him to succeed. So, I think mission is super important in order to have a sustainable business long term. Being able to have leadership that can get that buy-in is critical.
So then on the other side of that, and Zubaida, you kind of answered it a little bit, but how do you keep the mission from outweighing the need for cash and for structure and rigor in the financial management of the business?
And I think just going back to what I said, if you let your mission overtake the business itself, then you can be certain that your business will not exist a few years down the line, right? And I think it's really important. And as an entrepreneur, one of the key to leadership skills is that you learn how to balance the importance of keeping your purpose, your mission, your vision alive, but also ensuring that your team is well paid. Your team is kind of behind you. There have been certain months in the last 10 years of my business where we've had situations where we were not able to meet our payroll requirements, but we still had the team stand behind us, and they were incentivized for holding on to us despite the fact. And I think having that mission is important for your employees to stand behind you, even when you're downhill. But then that does not mean that everybody's going to be lucky to do that. And so having to maintain that cash flow with the mission, and it's kind of a delicate dance, right? And you're going to learn it, and you're the best person to judge that situation. But always make sure that you're well funded to ensure that not only you are safe, but your entire community who's supporting you, including your stakeholders, your board members, your employees, everybody is well taken care of. And I think prioritizing that cash flow and planning for that from day zero is really, really important.
Matt, when you're working with the companies that you were investing in and that you were serving as a board member now, how do you articulate that to get them, I'm assuming you've run into situations where mission is outweighing financial returns and rigor. And so I'm just wondering how you communicate that and get the team on board to kind of shift gears when you need to get them to rethink things.
Sure, yeah. I can speak about that from a little bit of a Madwire-centric space, in that, our vision is our mission is to help small businesses grow, right? So if we think about that, in order for us to be successful in that mission, we need to continue to be growing and be profitable ourselves. So I think, having that perspective that in order to fulfill your mission, you have to be managing cash flow and growing the business in a profitable and sustainable way will, in the long run, add more value and help you fulfill your mission. I think sort of taking a step back and having that kind of perspective can help with that.
Mike, both in your business that you ran before, the manufacturing business, and at BillGO, have you had experiences where you've had to kind of reorient everybody to focus on that?
I mean, the simple answer is yes, and it's constant. I think it's one of the topics that's teed up here, and I may be jumping topics here.
That's okay.
A little bit, but one of the things that I always try and force into myself and the rest of the organization is something that was spoken about heavily this morning, is we have to have a plan. And if we don't have a plan, call it what you want, a budget, a forecast, a plan, it doesn't matter. If we don't have a plan, we don't know what our needs are going to be, we don't know what to hold ourselves accountable to, and we don't know what to expect of ourselves. Dan was up here earlier talking about transparency. That's a really big part of transparency, is making sure that there's a plan that everybody buys into. Everybody won't necessarily agree with all components of it, but everybody has to buy into it and everybody has to believe in it, because then we're going to hold each other accountable to that. And that's where most of the redirect would come in those cases, is by making sure that the rigor was there in building that plan, and making sure that we're living up to that, but also pivoting and adjusting. In emerging, I think that the term that was used this morning is emerging companies. That's a really important thing, is being able and willing to pivot and to put that into that plan, put that into that model, forecast, whatever term you want to use for it, and see what the impact of that is. And that agility is really important, but always go back to that plan.
So I want to ask the audience, just to give us perspective, how many of you are currently cash flow positive? Okay. How many of you are pre-revenue completely? Okay, a few people pre-revenue. And the rest of you, I assume you have some cash flow, but you're not cash flow positive yet? Okay. So one of the things that I want to talk about then is how to plan for early profitability and creating reliable cash flow before you have an MVP, that minimum viable product that you can start to really take to market. We've done it by creating strategic investor relationship with the first client to get a bunch of cash up front. But there's lots of different ways to do that. So can you guys talk about kind of what you've approached? And you've brought in investment, but I'd like to hear all the different models for getting to some level of cash flow before the business is mature enough to really be cash flow positive.
Sure.
Yeah. So I've had the luxury of scaling businesses. I'm not a startup guy myself, so I haven't. I know it can be bad in an environment like this, but as has been discussed, there are a lot of different skill sets that are necessary in order to scale an organization appropriately. But one of the things, even in a business that's established and trying to scale, that we've talked about a little bit, but I can go into a little more depth and some examples on, is when we talk about being able, it's my fault.
It's okay.
When we talk about being able to run things that are parallel to what we're trying to accomplish, sometimes it's obvious and sometimes it's not obvious what those opportunities are. But they can be really great revenue generating opportunities. So with my last company, even though it wasn't a startup company, we did effectively a startup within a company. It was a traditional instrument manufacturing company. Was great at creating really high quality test and measurement instruments. And we saw the need and the opportunity very quickly when I joined the organization to say the data from this is really important. I went out into the market and I saw people writing it down, putting it into spreadsheets, and I said, how can we make this easier for people? So effectively what I did was I started up an incubator group within the company as a startup, funded it from profits from the other part of the company, but set it up with its own P&L. There was a 24-month path to getting product to market. As we were going down that 24-month path of getting product to market, we had customers, large hospital chains, that we were spending a lot of time working with to develop the product and to test the products and services to bring them to market. And one of the things that I realized was the engineers, the product people who were doing this out in the marketplace, they were being asked to teach people that they were selling products to about what the needs were, what the requirements were, what the problems were. And I said, what can we do with that? There are people who have a need for this. They're getting all of this information for us. I mean, somebody raise your hand when you know what the answer is of what we did there. Anyone? Didn't make a product, but we charged for those services. We'd go in for the initial presentations. We would get people going on the process, and then we'd offer consulting services. And lo and behold, it started to generate cash. Instead of not valuing our knowledge and information, we just asked the question, will you pay for this? And the answer was yes, people were willing to pay for it. Now, I did notice two distinct groups of customers. There were very large hospital chains that, quite frankly, don't value the information unless they're paying for it, and every time they were willing to pay for it. The scrappy, smaller organizations weren't willing to pay for it. They didn't have the money to pay for it. So we focused on the larger organizations because, quite frankly, they just didn't value it unless they were paying for it. So asking for it, they almost expected us to do that.
It's a great example of finding a way to get cash early. Zubaida?
I think from our perspective, just going from what he had said a few minutes ago about a plan, right? I mean, like almost certain, 110%, when you have a plan, you're not going to follow it, right? And as an entrepreneur, as somebody who's starting, as somebody who's taking a leadership position, it's very scary to tell your team, I'm going to invest hundreds of hours in creating this plan and that you're not going to follow it, right? So you come to this really lonely position. However, you have to live with it primarily because you're going to keep planning and you know that plan is not going to work because you're looking for opportunities to bring in cash, right? For us, initially, I think we've started charging for our expertise now, having been in the space for a decade. And we do consulting right now because a lot of people come to us and say, well, how would you launch a new product in the market? How does med device industry work? What is femtech? And we're like, well, if I'm going to spend 5 hours explaining to you and your team what is femtech and how does product development and design work and how does the implementation of this product work, what are the risk factors you're considering? Where are you going to raise money from? I'd rather charge for those services, right? However, the one thing to remember is that as you are building teams with these plans, the team that I built when I had an idea, to the team that I built when I was pivoting, to the team that I built when I was scaling, to the team that I now need for consulting, it's not the same people. You're going to be lucky to find the same people to stick with you through all phases. So knowing when to change your team members, when to bring in new team members is very core to how you balance cash within your organization. Sometimes you're like, oh, I have this secretary and she can become this person because she knows everybody in the industry, and then you end up bringing them into another job profile and they are a complete disaster in that role. And that causes a lot of painful cash decisions within the organization. So investing in the right people at the right time, I think, is a very important cash flow decision. And also, as you make the pivots that are not necessarily in your plan, having a personal advisory group to make sure that if you're going to create a bigger blunder by entering into a new space that is not to your plan, and being able to support you as you stand up for your team. Obviously you're going to deter from your plan. Some of them are going to be successful, some of them utter failures. But knowing how to learn from those failures and implementing those, and ensuring that you learn fast and fail fast. So if you know you're taking risks, but investing cash to the point that you're ready to lose that cash, I think those are important decisions you make as you build and go from an idea to different phases of your business.
Great. Oh, question, I think.
Did you actually let employees go, or did they just naturally leave?
It was a mutual decision. So we've let employees go after the startup stage, but now we've brought them in as a consultant. So we've never let employees go saying we don't need them, but I think we made it a mutual decision to make sure that they were in the right fit to where the organization was. And we're glad we did that because now we're able to bring them back in when we think that their expertise is needed.
Great. Yeah. I assume by the question of MVP, I think probably a lot of you guys have software companies or some companies that are technical in nature. I was going to answer the question similarly to how Mike did, in that something that I saw be pretty successful with early stage software companies is actually to, before releasing a full version of their product, do some early consulting work with some large companies that would be likely customers of theirs for that product. You know, a few major benefits to that. One is the obvious cash flow part of it, that you have some interim cash flow to keep the lights on and keep innovating and keep working on that product. And then the other benefit, I think, is that you get a ton of feedback from the customer during that period of time too. So who better to give you feedback on what ultimately your product should look like and what the functionality should be and what it should deliver than that customer, that big customer that you're able to get for a consulting project. And I think when you talk to a lot of technical founders or technology founders, a lot of them think that consulting is sort of like a dirty word because there's not a ton of enterprise value associated with consulting. But I think especially early on, it can be invaluable for founders of technical companies.
As long as you don't let it become your core.
Exactly. Yeah, exactly.
And one other thing to follow up on that is it's kind of a question. From your experience and what you've seen, do the customers that you consult with more often or less often become product or service customers after that?
Yeah, it's a good question. I mean, I've seen both. I think, yeah, it's a good question.
So from my experience,
yeah, go ahead. Yeah,
almost always they're already invested.
Yeah,
in
They
us
already
as an
trust
organization. They trust us. Almost always they
Right.
became service customers and product customers for us afterwards.
they can sometimes even be, to Candace, your point, like if you could get someone like that to be a strategic investor in your company, and then they have a broader play in your success and are actually physically invested in your long-term success, I think that can be a great entree point to that as well.
Yeah, we launched a software company back in 2005 that was focused on exchange technology. So we're financial services, so allowing trading. And it was a brand new technology, so we needed to build out the concept as well as build out a product from it. And so one of the exchanges one of the U.S. exchanges actually bought a license before. This was my best sales job ever. I did $1 million deal with no product, no people, and no company. But that can actually backfire too if you're not careful. Now, we already had a relationship with that client because we literally, I mean, talk about serial entrepreneur. I literally walked out of one company, we sold it to our investors, and we started the new company the next day with this, and it was a joint client for the two companies. So we already had that relationship established. But one thing that you have to be careful about, especially in product development, is that making sure that those consulting clients that you're working with represent where you want to go and that you're not getting tunnel vision with one client. Because with developing technology, and I'm sure the same is true in manufacturing, that you can skew too much of the product toward one client, and then it's not going to be marketable to the rest of the market. The other thing is you've got to be really careful about IP, so get a lawyer involved early. But be strategic about how you think about that, but it was certainly a way for us to get that business launched. Let's talk about working capital needs and other ways to get working capital. And I want to hear some stories about getting it wrong and how you corrected.
Somebody else go first. So I don't take all the
I
time.
think we were a very manufacturing intensive business. And earlier on, I think we did take on some expensive debt that we should not have, that led to various kinds of issues and almost a shutdown within the first 2 years, primarily because this debt was based on a promise of an order, which then got sucked into the business for other activities, and the order never came through. So I think that the big lesson learned for us was there is specific kind of capital for specific kind of operations within the business. And you need to be very mindful to learn about those. And I think my last presentation to UNICEF was like, we used a methodology called blended capital, which is now actually a term. Like, we didn't know that's what we were doing. But we eventually started bringing in strategic investors. We brought in our suppliers as investors. So there was a profit share for everybody. So if we got $100,000 PO, then we basically went to our suppliers and said, well, we'll pay you at market rate for bulk, but we want a 3-month time to pay back, right? And so instead of going debt, we started going stakeholder relationships. And then instead of giving equity, we also went in and took in convertible debt with rights for us to pay back the debt first. So that way we were able to, even though we took in a lot of capital up front, we were able to hold a lot of equity because most of the investment that came in was from strategic investors and impact investors. That helps.
Yeah. I think I'll speak to some stuff on the positive side that I think you can do from a working capital perspective in the software space. So a very common thing in software is a concept of giving discounts for annual contracts versus monthly contracts, right? Because if you do that, you have the benefit of 12 months of that cash flow up front that you can then invest in the company and use to continue to grow your business. So that's something that a lot of businesses try to take advantage of. I think you have to make sure that your price point is aligned with your customer, and that meaning if you have a higher price point and you're selling to a small business, maybe it can be a little bit difficult to get them to pay annually up front, but maybe that there's different product bundles you can come up with or something like that to achieve that working capital benefit. I think the other thing is just being tough with suppliers, right? I mean, I think, something that I've had success with at Madwire is even telling a supplier that you're going to put their contract out to bid, even if you don't want to go through the exercise of doing it, for me has had the effect of getting sort of immediate better terms or better pricing from suppliers. I mean, thinking about it from the other side, it's it's really hard to go out and replace a good customer, right? It's much better to keep that customer even if there's a little bit of pain for you on that side. So those are two tactical things that I think are really powerful to helping working capital.
I can speak about a mistake.
Go for
I
it.
mean, I've got lots of mistakes if anybody wants to learn about those. But sometimes talking about the supply side again, the lowest price supplier is not the lowest cost supplier. And a specific example is overseas manufacturing versus local manufacturing. Ties up cash massively. There are a whole bunch of different ways to do calculations of what the threshold is, and everybody has opinions on that. But tying up your cash for physical product to sit on the ocean for 60 days when you can't sell it, especially when you're early stage or emerging, can be a total killer. Even if it's a bigger difference, I think early stage, start local, because local companies will work with you more, and they'll be more flexible, but you're also not tying up your cash in something that you can't sell. You're also running a much lower risk of having dead, dying inventory because you don't have to plan as far ahead for things to be sitting there. And then it gets in the warehouse, and demand fluctuates a little bit. So definitely, you can look at it for the long term, but in the early stages, local can be a lot more beneficial for manageable price differences.
So,
And I made that mistake.
so there are three things that we've been talking about a little bit here, and I wanted to give you a chance to give some case examples of these, and then we're going to turn it over to the audience for questions. Accelerating payables, delaying receivables, and shoring up short-term capital shortfalls. So who wants to take which ones?
I think we want to switch those.
Right.
Accelerating receivables, delaying payables.
You are absolutely right.
You were testing us, weren't you?
No, this is how I think at midnight. So don't work with your suppliers at midnight the night before a big event.
A basic philosophy that, without going into a lot of details on this, is you never got anything you didn't ask for in life. If you work under that philosophy, there is phenomenal opportunity. Slight changes in margin on either side will not, in most cases, if you have a viable, sustainable business, will not make or break your business. But changes in terms can make a big difference in your cash flow. And you'd be surprised how often you ask for something, you actually get it. Don't be afraid to ask for it.
You have an example?
I have 1,000 examples. I mean, on the accelerating receivables side of things, setting something up where I'm trying to think of how to frame this. What are the two levers that you typically have? You have price and you have payment terms. Flex around with those with your customers. Offer a slight discount, not a payment discount, but a discount on the price of a product, and get people to agree to pay earlier. If you offer a payment discount, from my experience, again, my experience is only what it is, but if you offer a payment discount, 1%, 10, net 30, especially when you're working with 800-pound gorillas as customers, they're going to take the discount and
Still not pay you.
still pay net. But if you offer a different pricing structure for a different payment term setup of net 10 days or something like that, then once they set it up in their system, it's going to get paid on time.
So basically you're saying if you want to pay this price, you have to pay net 10.
Yes,
Otherwise, if you're going to pay net 30, it's this other price.
exactly.
Okay.
And make it meaningful for the customer. An extra % on your margins at the early stages won't make a difference. Make it up on the next one.
Okay.
We've had a lot of trouble with our receivables, especially because we work with a lot of small-time hospitals that are spread across people with a billion population. What has worked for us, we've tried different things, but what actually worked for us is we cannot get people to pay us in advance because if we do offer a discount, they expect that discount whether or not they pay us. So we let people have, and we come up with new offers every single month. And basically we say, well, this month we have this offer because of X, Y, and Z. You'll have to pay off your previous bills for us to give you this, right? And so with hospitals where we know the supply, we either go back to them monthly, quarterly, every 6 months, and we give them a new offer, which is appealing enough to them to pay off the previous bill and take this new offer. That way we're able to keep them engaged. We also had to, we had to build a product portfolio. Like Candace was saying, we had to commit to products we didn't even exist in our portfolio because we wanted them as clients. For example, we went to this one hospital where we were supplying birth kits for a year, and they said, we love your product, but we want newborn care products because we want to use them right after delivery. At that point in time, I had no newborn care products, but I said, yes, we'll supply them in 6 months. And I got the order, and we used their input to go ahead, talk to other customers, and start building the product within the company. And it was a great way to give them free products in 6 months. It wasn't ready, but we gave them free packages for which the packaging wasn't designed yet. We didn't have the license to sell it, but because we were giving them for free, they were happy to use and give more feedback. So within a year after that, we were able to have a commercial. We had 2 products commercially that they were buying, other customers were buying. Of course, I would have fallen on my face if things didn't go right, but rightly so at that point, we weren't sticking to the plan. We needed new team members, we needed more cash flow. Again, that blended capital piece, I decided to go ahead and look for grant money in a for-profit company to develop these products. And so I think by strategically using my relationships and understanding my clients, I was able to bring in new products, but also help keep them as clients and give them offers and free products so they were paying more regularly for the first product we were supplying for.
Great. Yeah, one thing I try to think about is just being strategic about when to negotiate things like this. So something I try to do with suppliers or people that are pitching us on their services is try to bring these things up while they're in sales mode rather than having it just be like an afterthought what terms are that you pay them on. So if someone's trying to sell us a new video communication system or a new whatever, getting that negotiation out when they're trying to sign you up to customer and just saying, hey, our standard policy is we don't pay vendors for 45 days and giving yourself a little bit of a cushion there as well, so that it's something that they almost think of as if I can give them this, then I can get the sale. You just have a lot more leverage if you're strategic about when you negotiate stuff like that versus sign the contract and then go back to them and try to get better payment terms.
Okay, it's your turn. Questions? Okay.
Back to the consulting, do you see that as like a premium tier service, or is it more of like an intro lead gen thing? I've been talking to some business consultants who say to focus on like a premium package only for those high-level customers that would include consulting. But from what I'm hearing from you guys, you see it more as like a parallel revenue stream as a lead gen.
She's in software.
I don't necessarily think they're mutually exclusive, if I'm understanding the question correctly. I mean, it can be a parallel business, but if you value it and if you think people valuing it starts with you valuing it. Commercially, present it as a premium service. It doesn't necessarily have to be your core.
You can eventually package it too as part of the services offering, where consulting can be bought as an additional service on it, and you can even put that into a recurring revenue model long term.
Right, yeah, I guess we would just be testing if it works better, but it sounded just like for you, in your case, that it works more like people in the middle to begin with, as opposed to starting it as a thing.
Yeah. It was definitely not a long-term core focus for us as a business.
Yeah, I think there's a balance, right? I think that
But charge a premium.
to Mike's point, you want to make sure you get paid what you're worth, right? If you're providing a lot of service to the customer and helping their business, then you should get compensated for that fairly. But if you're a software company, I would think the long-term plan is to develop a product and to have that customer be, an early adopter of that and a source of feedback and learning along the way. So I wouldn't price it so high that they're not going to work with you, but I would make sure that you get what you need to get out of it. So kind of a depends question, I would say.
I would also say that when you start raising, and I kind of help a lot of entrepreneurs on the side, and sometimes when they put consulting as their revenue stream, as they're building a software product, it's kind of frowned upon by investors because they look at it as something that you potentially will spend a lot of time on away from. But I think if you put it under a client acquisition cost or getting to know your customer, I think that is welcome, but not on your formal documents, right? And I think there's a fine line to draw between how you look at consulting. Like in their case, they were looking at consulting as client acquisition. In our case, we're doing consulting to get paid for the decade of experience that will help others' journey in that process become shorter, right? And I think if we would have said to our investors earlier on, we would do consulting, we would have never raised a penny. So I think it's very important how you use that word consulting and how you fit it into the puzzle of your business, and be very strategic about placing it if you see that there is a value to what you're building.
Yeah. I think sometimes too, ultimately if you're a software company, you want the preponderance of your revenue to be software revenue, but I think there's benefit to having some high touch professional services associated with that, just because it keeps you in front of the customer too, right? I think sometimes, I know personally, sometimes I get frustrated with the SaaS vendors that we have because I feel like they sold us once and then we never talk to them again and we just get a bill every month. It's not a terrible thing to have some ongoing dialogue and FaceTime with your customer. So if things are starting to go south or if there's some sort of issue that they're perceiving, at least you might have that relationship with them so you have the opportunity to correct it, or just a little bit more of a heads up so you can try to get in front of any cancellation or something like that.
Other questions?